Hello traders and welcome to another video review. Today is Thursday, March 2nd, 2023. Let's take a look what is going on the economic calendar today. The most important data for today are the CPI data from the Eurozone, scheduled for release at 11 a.m. For the month of February. The previous reading was 0.6%, the forecast is 0.2%, so the market participants expect the consumer price index to decrease 0.4%. So the actual reading will be very important for all of you euro traders, especially for the euro dollar pair. The other very important event today is the publishing of the monetary policy meeting minutes by the ECB, European Central Bank, at 1:30. This monetary policy meeting accounts will likely show us the way of thinking of the ECB for the next couple of months. Initial jobless claims from the US is scheduled for release at 2:30, and the market participants expect a slight increase in claims from 192,000 to 195,000 claims. So, three important data for today. All of them are market movements, so let's take a look how the situation is right now on the charts. What's the situation, how the bulls and bears are being involved in the price movement. I guess we should start with the euro dollar. Euro dollar 4-hour chart is showing us very interesting market movement. So we already know that bulls broke above the potential trend line here, which was of course a part of the potential bearish wedge that I suggested a couple of days ago. We had this bearish movement, bearish underthrow. Nevertheless, we have first wave to the upside, testing, breaking above the 50 periods moving average on the 4-hour chart, testing it, reversal, bearish engulfing pattern. So there was a reversal. Then there was a bounce again above the 50 periods moving average, testing 100 periods moving average, consolidating around this zone, and now going lower. Price is going lower towards 1.0623. This is where the 50 periods moving average is, in order to test it. And it looks like this market movement is finished. Please notice that the latest market movements are in three waves. So we can label this recent movement as the wave A, sharp wave B, and wave C. Let's see if there are any projections here, the Fibonacci projections that might be applicable for this situation. So we are going to use trend-based Fibonacci expansion tools, and what we are going to test is of course this level from the top of the wave B, and as you can see, the length of the wave C from the bottom of the wave B is 100% of the length A at the level of 1.0676, and the high was 1.0692. So this is missed greatly, whereas 1.16 as you can see is much higher. So there is some sort of the bearish of the market geometry. Nevertheless, it still looks more likely like a free wave up movement that had been completed. Nevertheless, there is no straight reversal to the downside. We still have this RSI above the level of 50. Right now it's 53 points. So we should expect this market to bounce from one of the technical support levels or Fibonacci retracement level. If we place the Fibonacci retracement level on the wave C, for example, on the other way around, we can clearly see that we already retraced some movement. Let's take a look here. Okay, and right now we retraced 38%, violated. We are now approaching 50%. 1.0629, and maybe even we will hit 61%, 1.0615. So as long as we are trading above the 61% of the Fibonacci retracement, the outlook remains slightly bullish, because we are not quite sure whether this ABC movement to the upside is now definitely completed. Confirmations comes with the movement below 1.0615. Okay, let's take a look at another euro market. I guess the best one will be euro to the Japanese yen, and then the situation here has changed very, very rapidly. We are approaching the level of the technical resistance, the swing high located at 1.14676. And this level is the high from the December last year. So the up movement is still being continued. We got one more level, but that we can place on the market, on the chart, sorry. This is 1.4578. This level is of course the technical resistance. So we are getting closer and closer towards the very important let's say supply zone. The highs from the December 2022. We are trading above 50 and 100 periods moving average. After this sharp drop here to the level of 52 points on the RSI, the momentum rebounded, and it's right now on the level of 67 points. So it's strong momentum to the upside. It took plenty of hours for this momentum to go to the upside. Even we even have the tweezer top. Nevertheless, we are still moving higher. This high 145.42 had been violated. We have a 145.51 is the high. So we are 51 is okay. It's 9 pips higher. There you go. This candle is already 9 pips higher. We are heading towards the supply zone, and it looks like this supply zone might trigger some bearish movements, might trigger some bears in order to push the prices a little bit lower, and maybe terminate this uptrend. Nevertheless, on a 4-hour chart, so far the outlook remains bullish on the euro to the Japanese yen. One more euro part, maybe one more euro GDP chart. What do we have here? Very interesting situation. We got this, let's say we got this line here from that high towards this high. So we definitely have some sort of the trend line, and as you can see, we are just testing it right now. Very, very interesting point on the euro to the British pound. Very strong rebound from the levels of 8,750. The 50 and 100 periods moving averages were violated straight on without any compromise, and it looks like the bulls, they know where they want to go. They want to go towards this short-term trend line resistance. We tested it. The market didn't actually close above this trend line, and it's being rejected again. The momentum is right now on the elevated levels, almost on the extreme levels of around the 67 points. So we are hitting the extremely overbought market conditions, and that is not helping bulls. Nevertheless, we got technical support located around 8,836, not that far away, on the 40 pips lower. So the current scenario for the euro to the British pound might look like this. If the market wants to do the pullback, they will go towards this level, and then of course they might rebound and break above the trend line. We can even extend it a little bit for you guys to see. There you go. That's the trend line. So if this level will hold the bearish pressure, there is still a chance for the bulls to rally way higher. The ultimate target in the short term for now is located, of course, at this high. This is the 3rd of the February high, 8,978. So this is the potential target for the for the bulls. Any breakout below this level would likely give us another downside movement towards the lows of 8,754. So please keep an eye on this market, please keep an eye on these levels, and especially on the moving averages as well, because they will create some kind of a pillow for the bears, so they can just bounce from that pillow higher. And if the trend line is violated, the future looks a little bit brighter for the bulls on the 4-hour chart of the euro to the British pound. Thank you very much for listening to this analysis. I hope you have a great time, and I hope I will see you next time. So take care and bye bye.